I just built a 10-period EMA trading system with MACD at the bottom is my oscillator, and I have the big fat white line is the 10-period EMA, and the baby white line is the closing prices. So all I did was, and this is nothing special, this is all what comes with any platform right out of the box for free. So I took all my grids off and all that nonsense, because for the people that always look at the market from the standpoint of patterns without regard to risk. So how to blow up an account is when you see a pattern and you don't know the actual pip ATR, but this is like blind ATR trading. This is just, I'm going to cherry pick all the great entries on the 10-period EMA system, and then I'm going to show you the divergences of the MACD entries. And sometimes the divergence on the MACD is a better trade than trading the trend trade concept of you have a moving average that's going up and you're buying on pullbacks into that moving average, and you got a nice momentum, so it's not a sideways. When your EMA goes sideways, some people won't trade that from a trend standpoint because it's not got enough momentum. You're really not screaming along. Now this is the dollar to the yen 5-minute chart, and on this chart it wouldn't be too hard if you told somebody this big white line, I should probably make this a different color, but let me just pick a different color, I guess. I don't know. Seems like I just like white, black and white world. Stuck with the view of, let's go deep blue, and I'll just go super fat. So if you only took trades at the blue line, the market comes into the river. I would call this the river. I call it river trading. Comes to the shoreline, and the stream's going up, and you're going to buy at the pullback into the river. This is a simple system. This is totally going to make you a ton of money if only you pay attention to your stops. 5-minute chart. You can either have a buy limit pending here to get picked up at the riverbank, and you maybe have a stop here at the last known wick, or you just sit here and babysit this puppy. When it comes in, you could have an alarm set when the closing prices get into your, I mean, you can obviously build a robot that says if you get a rate of change of X on your 10 period, come on in and keep buying at pullbacks on top bottoms. And here you don't even get, if you're truly waiting for a close into this line, maybe you need to be on the 4-minute chart. And I think you can see that on the 4-minute chart, you would have bought. Now here's the divergence kicking in. Now mind you, I set the MACD to an extreme level. I basically took away the idea of a signal line, and this is nothing but the difference, the histogram difference between the blue line and the white line. I simply did that by creating extreme settings in the indicator. So the classic MACD, which is an oscillator, they're claiming, I put EMA at 1, which reflects the closing price. I put the slow EMA at 10, which is the blue line, and I just put the signal at 1 and said, I'm just going to duplicate this. In other words, it's as if the signal line doesn't exist. And it's as simple as that. Closing prices, because I could do it on highs and lows, and that's, if you study Alexander Elder's bull and bear power, which I'm pretty sure it works too. And of course, these, you have to really wait for these setups, and you need some type of be aware of the ATRs. That's all I'm saying. That's going to blow you. It's going to blow up any robot if it's set to a hard stop of 20 pips on a certain strategy, because the wicks are just going to crush it. You know, just blow that thing up. And you probably need you need a 12 EMA, a 14 EMA. You need an EMA bots across the boards because they're just going to get, moving average bots are going to get blown up, when the news comes out, for sure. And so this here, if you look inside the, I just set that, the Alexander Elder is trading the same thing. He actually waits for the market to, he runs a 13 EMA. His entry would look like, now you have to cherry pick the best entry here. That's just how you're just visually back testing him. Here, like, he runs a 13 EMA, which is smoother than a 10, but you don't trade as frequently. Here, he would have got filled on his rule system. Now, imagine the 10's coming in like this, a little smoother. It's pointing up, and he's getting a pullback, and he puts a buy stop above this candle, and he gets confirm entry on the ride out of that. But once you realize that there is still the painfully obvious top that becomes a bottom almost nearly, just horizontal pricing wise. Now the revisiting of this, you're not trend trading, you're just price trading. Even though the guy that sold the divergence up here, which on the 10, so the difference between here is being plotted in the histogram. I'm sorry, the difference between the blue and the white is what you see at the bottom of the screen. So there's no, MACD is just a way to look down and see the difference. Gotta fix the scale here to get the difference to show up as dramatically as it shows up here. So loss of momentum's divergence caused by the, see this vacuum is big, represented here as a giant vacuum. The vacuum gets smaller. It's running out of momentum. It's hard to see in the chart that this is a smaller area, but there's your divergence. You have to sell into that pretty hard. In other words, you got to, for every 5 minutes up, you have to be selling into that every 5 minutes. Or you got sell limits that are just, on the other video where I just grid trade it and just sell, have a crop of sell limits up here to get the pullback. It doesn't mean that you can't realize that, hey, just because you have a grid thing here to sell into that, if you don't want to babysit the market, you can fill it on sell limits, but you also be selling this painfully obvious divergence here. You also have a painfully obvious divergence here between those closing prices, and you literally got to pull the trigger right there on that 5 minute. So if you like trading at the market every 5 minutes, and here you could have built a position. Here's your first divergence you got. Here's your, I don't know if you see that first divergence, but see this peak to this peak. I need a better color. You can't see it, but here to here is your first divergence right there. So you could have sold. Notice there's no divergence here. In fact, you can draw trend lines on all this oscillation. So here's your break and pull back, find support. All those rules of tops become bottoms, and it applies to your oscillator, but now you're extrapolating so far out that you're hanging a branch off a branch. It may crack off and you might end up getting hurt. Here's divergence. You literally got to sell into that. Here's divergence you got to buy into. Now here, you're totally counter. Your 10 EMA bot is getting filled here on the river going south. The party's over here within 15 minutes. So if you're scalping, you've either got a buy limit here because you just know buyers are going to come in there, or you're watching the loss of momentum too. Ultimately, you've got a buy limit on this previous top. You know this is the feeding zone, but you got a quadruple divergence. I mean, in other words, you buy here, you hold it for 15 minutes, scalp out of that, and you're still in on pendings. You can trade. At that point, who's going to trade on stops? If you're trading at the market, you're saying, let's hope you've got enough patience, or you're going to come back to the platform and say, or you draw a trend line here. But this makes money all day long, blows away any Fibonacci system, because Fibonacci is just bullshit. This is momentum trading. And people say, oh, remember when we used to momentum trade? What the fuck? What, has it gone away? Is momentum not exist? Are people kidding with this shit? We got Gartley's advanced pattern. No, we don't. Who trades momentum anymore? Well, the market does. I mean, in other words, the motion of the market has a limitation. You think it's going to go straight down 5,000 pips for the next without looking back? Can a market really, is that even possible? You think the euro is going to fall out of bed tonight and drop and go to 70 cents without ever looking back? No, because it runs out of momentum. It runs out of sellers. It runs out of buyers. Why do you think the market reverses? You can trade divergence all day long and make a mint. A mint. Look at this divergence. 10 EMA. This is very sensitive. That's why I like it. I'm a sensitive person. I'm a sensitive guy. Hey, ladies. So, look at buy limits here. And yeah, you're getting divergence. The guy's getting in here. Everybody's onto it. We're all getting in here. We have to get in there. The sellers are hitting their targets. Sure, the trend traders are like, well, so you told you trend trading works out good. Oh, really? So let me guess, you put a trailing stop in here and you didn't see this divergence and get the fuck out and go the other way? Look at this. Buy limits sitting on that wick. Ain't much time for even the setup for divergence. The wick is not even included in this stuff. Look at this beautiful sheared off. Now if you draw a Gann grid on this bottom indicator, you'll see a complete confluence here. Put the Gann grid on there. This is like Gartley madness, right? This is like Gartley upon Gartley. Geometric madness. And you're going to cue this to the divergences. And seriously, you're going to get intersections there. Yeah, because that's momentum. You're looking at the right, just like, oh, look at this thing. Look at this thing touch. It's like magic. The magic squares. I mean, that's in math. That's been around for years, the magic square. All that old stuff. So maybe you got that down there. It's like cloud. It's like a grid cloud. It's like a Gann cloud. You have it down there for entertainment purposes, but it definitely shows you the divergences, or it shows you the idea that there's another angle in there other than just the. So right here, this is totally beating up any trend bot. Now, this EMA, imagine this. There's no point in building an EA if you can't see these setups in here, or if you can't see the rule system that you need to build to get into this trade. I gotta get rid of the Gann grid because I can't see the damn zero line here. Very good. The zero line you can make big too, but that's my crossover. When the moving averages cross over, that's when the histogram. The idea of a histogram is great because it gives you the waiting for each guy to fill in. So I'll just go back to the standard thing here. So now, when it goes sideways, here is where the trend bots are losing their ass. All this chop, and who knows how tight your stops are during this period. But if your rule was, I only buy when MACD is below here, then you're only taking the buys here and you're a range trader, just by default. You instantly turn into a range trader with that rule system. You buy here, you buy here, you buy here, you buy here. You only buy below zero, even right here. This is the ultimate entry. This would be the quintessential. It slightly dips below zero, which means it just went below the blue line. You're getting in at the river. You ride it to this trap, right? This is where the sellers should come in, and you get out. They apparently don't come in until you get up here. But if you're this is the crowd moving in a 10 period exponential moving average. That's the crowd riding along. Now, if you put a simple moving average, it's going to be slightly different. If you put a 11 period moving average, it's slightly different. And as far as the reversal entries, positive, negative reversals, and these, some people call that something else, but so there's 3 trades on here. There is the, well, I'm just going to trend trade it. I'm going to keep selling every time we get to the river. I'm looking for it to be above 0 for my entry. Above 0, I get in. You have the fact that you have to pay attention to divergences coming. Better get the fuck out. Here was your other divergence. And there's the reversal trade, which is the loss of momentum at a higher price. And on here it would be this low is lower than here compared to this triangle that you broke out of, and you're going to buy here. But it's easier to see that in RSI than it is to see in this histogram, because this is not a true index. That's why you have these insane moves. But in RSI trading, when you have more overbought, like here's one. It's just very subtle in here. It's harder to see it. But see how this is more overbought than these 2 tops? If you compare those 2 tops to this, that's a great trade for that last blast. And the trend traders got that right, and the structure traders would get that right too. Or the, if you zoomed in on that, I'm sure there's a trap. Now, I'm on the 5-minute chart. If you go to the other time frames where you can sit back and wait for entries, so you got to be pretty quick draw McGraw here on these entries, and you just pick the time frame. Now the 15-minute chart, here's your premium entries here. You never dip below 0, but you can see this is the perfect setup. You got 3 trigger pulls every 15 minutes. It's coming back to the river. Here's your you don't have to back test this with a computer, okay? You don't need to run an EA of this to see that if you bought with the concept of this being an uptrend, so you buy pullbacks here and you get your nuts crushed because you're like, oh, it worked in the past. You can't see this divergence? Like, okay, this divergence here, if you're momentum trading, which anybody with a moving average is momentum trading whether they like it or not, or they wouldn't run RSI at the bottom of the screen. So what's it there for? It's to warn you that the ride's over. Time to get off. Now here's a nice, and as you go up in time frame, you have other issues. You're risking more. Here's a divergence that becomes a reversal. So you get the counter trend move, but it comes back to the river. If you had a 13.5 EMA, you'd have a perfect river entry. Here's good entries, and you made some pips. You're buying below 0. You're pulling the trigger below 0. You're pulling the trigger above 0. How about this sell? Just fucking sell. How'd that trade work out? Not even a good trend trade. So you could have a rule of, I sell above 0. I took this out of the market. I sold above 0 here. I doubled up on that trade. How about the fact that this is coming back to the previous triangle? Classic place to get in. Breakout, pullback, get in on the pullback. But when the ride's over, it's over. Divergence. Right? Divergence, the ride's over. Get the fuck out of the trade. Or sell there. Or buy there. Right? I mean, buy here. This probably made more money. In a little, well, more money took more time than this down move. Almost divergence there. And of course, if you make this a classic EMA with the 30, 26, 12, whatever, forget it. You're late. If you're waiting for the signal to cross over, what MACD, they took it too far. They go, MACD is 4 moving averages. It's built on close. It's a 26, what is it, 12.26.9. 12.26.9. Where do these fucking numbers come from? You know, that might, who wants to have a signal line? That's worse than a signal service. Stop it with the signal line. It's moving average, convergence, divergence. There's no mention of a signal line in the fucking title. I could just go on forever what's wrong with what people are saying. And are they thinking about this shit? They're torturing people. People are jumping out windows. I can see people across the street. They started trading, they're jumping on a window. Go to the 30-minute. So if you got an eye for divergence, you can see this is a killer fucking entry. Steep divergence all day long. Half hour. You sell up into that. Plus you got sell limits up here based on the concept of sell high. This isn't the greatest divergence in the world. Here's a great one. Look at this killer entry. Unreal. If you're waiting for the close of that, and you're already getting divergence, maybe there's no lag on that. There's no lag on these divergence entries. Another divergence. Look at this baby double bottom here off of that. Here's the sellers. Counter trend trade that. Divergence there. Not really here, but this is the reversal entry. More oversold than it was back here at a higher price. And this 10 EMA, in other words, the river entry was here, you made money, but the ride's over. When you're getting in, this is why Elliott wave, this would be either wave 2 or wave 4 pullback, the ride's over. Divergence into the 5th or the, you know, Elliott wave is up, down, then big 3, then 4, then 5 is going to give you the divergence because 5 is struggling. Here's your top bottom. So in a perfect world, this is 0 wave, this is 1, this is 2, this is 3 is all the money you're going to make. That's buying at the river. And then the divergence kicks in on wave 5. But the problem is the market's constantly churning in some bizarre ass like, oh, you got to be on the 48-minute chart now. So you built a static 10-period moving average system. Okay, it's great. It's great on certain times. It sets up like a, look at this bullshit. You keep selling here, you're a genius. On this 10 EMA on the 30, you keep getting divergences telling you get out, get back in, buy it back, give it. Piece of cake. Here's a divergence. You kind of have to look for this. But how is that not divergence? Loss of momentum, pullback, not the greatest trade in the world. And this is not, like I said, it's not like RSI. You can't get a killer, more oversold or higher price. But if your rule is to just buy below 0, you're doing good. Another divergence. This could be it for the dollar. The sellers made money, but the river traders came back in and bought it back at that top, becoming a bottom. Maybe you should buy it back. Maybe this is a failed. Not all divergences kick in. Look at this cute little killer double top. Now, if you're running a longer period moving average and you have a histogram down here on the 10, that's certainly the way to go. Now you're going to step outside, have a 20 EMA with a 10 signal line. Your signal line is your histogram now. Fuck the in other words, there's a histogram of the histogram. The people who've written histograms of the histogram know the signal line, the difference between the signal line. That's what MACD is trying to do. So you might have to set your, in other words, I'm making a super sensitive oscillator. In one magnitude higher, I could get rid of I could take the 10 EMA off, or I make this a 5 signal down here. So what I need to do is, I don't want to change because you can see how much money it made here. But what if I put the signal at the bottom of a half length of that? And now I'm going to get more divergences. So if you play around with this thing, now this is you're building your rule list of entry. So go to indicator list and set this to, now I'm going to go to a 5-period EMA, half length of the river. Now you're like, holy God. Well, now you're going to see divergences like very dramatic. And you're going to see the reversals better. Now, this may be too much for people. They go, looks whipsaw to me, but if you take a look at it, realistically, I have the 10 EMA up here, and this hasn't changed as far as the trend entry. But this would be more trades, but higher probability of winning. Now you can see the reversal for the first time here show up. You're in a downtrend, you're at the river, you compare this price to this one, and you do a projection, you take this value, add it to the lowest close within these two things, which would be this, or you look back to here if you're going to do a more symmetrical target. And then when it comes up here, here's your super dramatic divergence. Everything's hyper dramatic now. And even this divergence becomes this triple divergence now for just that baby bounce. And then this is a failed. But now you would say you're getting whipsawed. It's too much. But yeah, that's the other one is let's leave it at 5 signal on the bottom, and let's just go up to the 1 hour chart. And look at how the behavior changes on this thing. The 1 hour chart, this still looks like a great, you see divergence on the 1 hour on this big and this is here's a quadruple divergence. You could draw a trend line right on that. And the trend traders are getting in on this 10 EMA on the 1 hour. They're buying, and you have a buy limit here to get in on the pending. So the trend traders are in, and then the structure traders are in on that one. This one not so much. Now this is you're approaching the, and the problem with the Elliott wave is he's not counting these 4 waves as the dying out of a move. The momentum's going away. This is probably the biggest winning chart, a winning trade on this whole chart, as far as a very, just a child could see that, yeah, we're going up. We're going up, Daddy. Are we going to go up forever? So any person would say, well, if we're going up and you're a trend trader, why don't you just buy here and just get out in about, I don't know, 10 years and be up like 5 million pips or whatever. But it's not going to go on forever. And momentum, Now here you probably got a better signal maybe on a 3-period crossover. So you go to the 4-hour chart. You can't really go to the 2-hour chart here on MT4, but go to the 4-hour chart and using the same theory. Of course, it makes more sense now to be on the 4-hour chart with such a very fast EMA. I mean, it's set to 10. So you just clean up here for 4 weeks on the 10 EMA river entry. And you're in buy mode. As soon as this EMA is pointing up, all you do is look for pullbacks. And you're going to dump on divergences. So you buy here on this pullback, and you get divergence, and so you get the hell out. You dump out. The closing price comes, you're below the 0 line. It's okay to buy back again. So you dump out and buy back. Like, you don't know if it's, like you want to get out at the divergence for the climax. I'm just thinking. I mean, it just makes sense, but here's the reversal entry. Moreover, sold at a higher price. You come below the river. The river goes flat. I mean, this is where you're probably like, I wish I had a 12 period moving average. But realize when you get to this shit here, you're going to wish you had the 20 EMA. Right? You're going to wish and hope. So you take your signals as they come. There's a triple divergence. You're cashing out on your winners. You reload below zero. Buy. Those are buys. No divergence on this move. Oh no, there's a little tiny divergence up there. From this to here, the closing prices. Divergence. You're taking profits of divergence. You reload on, say, structure, or, and here it's where a robot wouldn't be able to understand. He would start selling here, not realizing that when you get divergence in a big uptrend. Now this is the first. Now this is probably the most powerful type of spring loading a market can do, is when it pulls back in the you're in an uptrend, obviously, and this is the 4-hour chart. So definitely, if you had an EMA of like a big ass 52, 56 period cloud, right? Everybody realizes it's fucking going up. Come on. If you see a divergence like this while you're in an uptrend, wow. Yeah. You really want to buy that. Because here's another one. Double bottom. Below the zero line, you load up. I don't see any other. I guess this is a very slight divergence. I'd have to stretch the chart out, but as you're coming back in, you're getting divergence that is the end of the pullback in the bigger trend. Wow. And if you just counter trend traded this all day long and you only got in on these pullbacks and you scalped every pullback, you're also a genius, because you scalped that pullback, you done good. So I'm going to go to the daily chart and take a look at the signals on the daily. Oh, look at this for this whole month. Beautiful trend. 10 EMAs killing it. Of course, now you're going to say, well, you should be running the 100 EMA on here. Of course, let's imagine it's out here somewhere. Oh, one entry. But if you're trying to literally make money on a consistently continuous basis, like here's an entry, right? By the river. Especially if the 4-hour, you can see where that was on the 4-hour thing. Here's a reversal. You see the double top here on the, there's a double top underneath the, right here and right here is a double top that corresponds to these tops. Got the wrong color on that, man. Just cannot. Right here, it looks like these two mountains underneath corresponds to these two. That's the reversal in the direction of the trend. Here's when you know you got to start thinking about getting out of this trade. This is the exact same quadruple divergence, or there's a triple divergence as you climb up here. Counter trend selling that. Here's the reversal, the pullback, deeper oscillator at a higher price. Everybody's in on that trade. The structured traders are getting in on that. Then poof, it all evaporates in one brutal smash down. But here once again, divergence in the direction of the major trend. Wow, that is a serious, powerful constriction point for the market to bust out of. And it's really seriously brutal. That's hard to be watching for that. Of course, if you're trading on the, now this is the daily. Let's go to the, you can cherry pick this all day long, and all systems work sometimes, given the right stop, of course. And if you're back testing with a certain stop on a robot, you can see how these wicks, I don't think you need to be a even a bad scientist to rocket scientist or nobody does those wicks are going to destroy your system like this wick up here. Now, when you look at it zoomed out like this, you have to ask yourself, why don't you just trade the top bottoms on the 10 EMA? Well, you could do that. You're going to realize that. Look at this divergence. So divergences, they definitely happen. Look, the oscillator cannot push lower. Oscillator called the top here. Oh yeah. So here's your divergence here. Big spike in your and you can see that this huge it's the difference between the moving averages, but a big move up and these two major tops. That's it. Market's baked. It's done. Even right at the very end there to get in divergence. And then here's your reversal entry. More oversold than that pullback here. Look at this triangle. So I'm on the daily chart. Let me go to the weekly chart and zoom in. And here's a reversal right now. Well, not really, but it's getting all wishy-washy up here. Go to the weekly. Zoom out a skosh. And then look at the weekly entries. Certainly going to make more money on any weekly chart. Looks just gorgeous. There's no way around it. All systems work on a weekly chart, but you're just not going to live long enough to get all the fills on that. So here's your reversal. More overbought at a lower price at the river. You're selling that, and the structure traders are selling that. Here's your below zero on close. I don't want my below zeros not showing up here. Oh, this is right. This is set to a 5. This is more sensitive. This is really going to get you in where the other oscillator is not going to get you in, but you run the risk of getting whipsawed. Here's a nice 2-period reversal divergence. And then not quite divergence there. Couldn't push it down to get that real... but yeah, that's 10 EMA. So on the weekly, it looks like a buy. I mean, I think the dollar's going to crush the yen in the end here. Look at this. Not enough sellers came in, but it was a great scalp. And you have a top bottom here. So we're going to find out. And look how the 10 EMA is just bullshit right now. It's untradeable from a standpoint of a signal of a wonderful 10 EMA, but I think we all know that if you sold up here, which I suggested we sell up there, and that was the top, right? And look how the ride, look at the ride down there. And this is why people will post up and say, well, you know, you were wrong and you were right. Everybody's right. The thing is, everybody's right and everybody's wrong. It's no us against them. I hope this blue on this green isn't killing your brain. It is mine. But I just want to get through this damn thing and post it. But look at this. Look at this. I'm saying sell as we come up into that. And I say we're going to go sideways. And what if I sold up here and I didn't take profits on something like when it dipped down on these days? And then could I have sold up here again? Yes, you could have. And could you have made more money in a shorter period of time? Yeah. Could you have covered your shorts off of this and held through that whole thing and not even cared about that? Your money management bots would have been stopped out very early on this. But if you're looking for, and of course this was the obvious, if you bought this trap here where when I say trap, I mean when we fill this vacuum and then we go up for another run, and then, God, in the end, I mean, the guy that even bought this last move of the week made money just by buying a retest of previous doji. So here's the doji. But I have, just to be politically correct, I took the gender out of the, there's no bull or bear candles, they're just bodies. So for the candle traders that are trading body, it's body size. Let's face it. You never want to go out on a date with somebody that weighs more than you and it becomes dangerous for them to be in a certain position. So the bodies matter. This doji matters. It's not whether it went up or down. It's look right. This is where you want your pendings to sit, in the small bodies, because you know any small body is congestion. Your buy limits here did not get filled, but if you put the, and the body's telling you place orders that fill that body, and maybe you aggressively start trading on the very top of that wick, you're buying new lows for that scalp. That was a tremendous scalp, but I wasn't trading by this time of the week. I wasn't doing videos on that, but that was the trade, because I'm trading on the demo, trading euro to the other four currencies. And here's your classic trendline break. Everybody's in on that. You got 10 EMA. Yeah, we're going up. That's the daily. Here's where the EMA starts to get its ass kicked. And then when it goes whipsaw city like this, goodbye. There goes your robot. You just blew it up. But you don't need a robot. If you can't see what's going on in the daily 10 EMA, which is 10 EMA is literally, I don't know what the exponential does to it, but it's a 10-day chart. You're trying to replicate what a 10-day chart would look like, and of course you're averaging it, which you're taking out. You're taking the market out of the market, and you're saying, just give me an average. And this isn't the greatest divergence here, but you can see a little shallow telling you it's okay to counter trend trade that. It's okay to take profits. Reload on the pullback. Buy back at the river. Sell when you're away. This is just like an animal analogy. That the metaphor is that the animal comes back and gets something to drink and he runs away. Here's a reversal, and if you can see that, more oversold at a higher price. All oscillators do that. Stochastics will do that. You know the trend. At least you're gonna go with this daily trend. Is this a trend? Can you make money from it? Yeah, but you can't just buy here and then as it comes up, you have a trailing stop and they stop you out, and then you're not along for the big giant kahuna ride. Because, you know, that's the thing. I mean, if you jump in, that's why all systems work. It's just the ATR when you get the stop placement wrong. And I'm speaking an ATR of 1, not an ATR of 14. I'm talking bar to bar, moment to moment. So it's constantly changing. You know, you can't step into the same river twice, and you're not the same person when you step into it. So you wouldn't even be able to psychologically manage. And of course, the robot's supposed to take that off your hands. It's supposed to, you tell it what to do, and it does it. But you can see here that it's going to drive it off a cliff. Here's a killer entry to just place orders right at the river. Forget the closing prices. And here's a slight, more oversold at a higher price entry. If on the 4-hour chart you were getting divergence at this point, telling you to buy, and you've got a top becoming a bottom with this thing, yeah, this is when you load the wagon, whatever your version of loading the wagon is. But realize that setup ain't coming along for a long time. Look, we're on this chart. If you cherry picked and you wanted to show a robust system, this would have to be it. I have a 10 EMA. I'm making money even on this crap before the parties get started. But see how they kicked you out before the party really got started? If you ran too tight a stop, and in the end, don't be ridiculous. This wick would have been a problem for your stop orders. And you would never have ridden what you know, what you could just see. We already confirmed we're in an uptrend. This is a pullback I'm getting in, but... And even the trailing stop guys got their ass kicked because they only made that much money off of a move that went on for how long? But now we're in Chopville, right? I called that. I said, I'm not bragging about my call, but anybody that's going to give me this hindsight bullshit, they're out of their fucking mind. I said, this is unprecedented. We're right at the floor. Scalper paradise. The monthly was my reference. I said, place orders up in there to sell. You can't even see the profits on this monthly. You're like, well, it's still going up. Really, look at the daily. It's a chatter fest. They just destroyed somebody's bullshit 10-period EMA bot that has the wrong stop. Right? It has a wrong stop in it. This is like a trap trade. You're getting divergence right now. And they're trapping the bulls in some. Or you're getting trapped. You get your first divergence just kicked in here for the first time on this damn thing. Of course, I'm pushing it. This is a 5 EMA histogram. But that could say, you know what? Maybe they still got to pull it back. Of course, going into the thing, we're right back into the floor we fell out of. Your 10 EMA says look to buy in pullbacks. Can't buy here. You definitely want to buy if you're going to run a 10 EMA or a 20. You got to wait for it to come back to your EMA and have a nice slope for your momentum entry. That's the rule set. If you need rules, top becomes the bottom, EMA is pointing up. You had to know when to get the fuck out of that ride. We're not going to go take out this high. So the trap was, people are like, yeah, I bought here, I got a nice reversal, retested the old resistance, didn't even make it back there. The thing's so anxious. We took out here, made new highs, confirmation entry, guys are getting in. Uh-oh, party's over. Wah, wah, wah. Oh, but I'm trading my system. I'm sticking to my rules. I bought at the pullback here. I put a stop in here. Oh, now I go short. Can you change your brain and go short? That's a great entry. Rolled over. Very difficult. Not even divergence to tell that top was coming. Look at this. Perfect entry, sloping down. Top becoming a bottom. But this happens in such a short, this is the 4 hour, you really got to be, hopefully you already got the sell limits in. After we close here on those 4 hours and they trap these guys to pull it back up, like everybody's like, oh yeah, it's going through the floor, man. But no, they just trapped into this top. So got a buy limit here, you got a sell limit here. You got a buy limit here now. You can see structurally where all your orders come in next week. Market opens tonight. You want to buy here and you want to buy here. You don't know if this is going to work out. You want to buy cluster orders. You want to just buy a grid of orders in there. Some are scalps and some are going to blow out. Everybody got short here. The scalpers are they already made their money. They made their money on the wicks. The question is, what's going to happen when we get to here? You can put sell limits up there. It's already established as a pivot. You don't know if it's going to keep going up and blow that bank out. So you take a risk. Take a risk of being wrong. Placing a penny out there, I guess, has more ego risk than even buying at the market in the end, because you're saying, I know when I get back here I want to buy. And it's like, well, how do you know that? You going to place that order now? Aren't you going to wait and see? I'm just going to wait and see. You may wait and see. Because you're a guy that's going to pull the trigger when it comes back there and go, yeah, that's just like I thought I was doing buying at the market. You make the same amount of money the guy that placed the pending order. But it's what you feel comfortable doing with. I just talked to a guy today, and it comes down to comfort in the end. Are you comfortable placing orders in no man's land? Or do you want to babysit the market? Are you good at you feel comfortable? You're like, yeah, I'm gonna scale into this thing. Like every 4 hours it's down. I'll never buy an up candle, never sell a down candle, never buy an up candle. So I bought, if you bought this down candle, this one, didn't buy this one, I bought this one, didn't buy this one, but I bought that one, I'm up on that trade. I'm right to where my bad entry was. So is everybody else. That's why we should expect selling to come in there. Here's a beautiful top becoming a bottom, but it's happening in a tighter pip range. So you can't trade without the knowledge of the volatility. Here's a complete retest of this doji. If you take that doji for a complete retest, beautiful scalp. You're out of the trade by the time it comes off the floor, but you have to have the right stops and the right take profits. Maybe they're break evens. But it's certainly not rocket science. And they say rocket science isn't even rocket science. It's just math. Pretty ridiculous. Anyways, it's my 10 EMA bot. It's free. It's not a bot. It's a 10 EMA system. I guess I'm going to call the video the 10 EMA on the euro to the yen. So let's see what happens with the markets and in the fair value world. If you consider fair value to be the middle of the road, that's where this ended up closing. So markets close at extremes and they close at the middle of the road. So right now we're stuck in the middle of the road, and there's really no trade here. As far as the only trade I see is that you're still short, waiting for it to come back here, or you're long and you're really hoping it doesn't stop you out, because you're right in the middle of this. I'm missing my rectangle. I'm just going to draw one. This zone here. So everything from here, actually everything from last week. So last week's range is here. Right, this is, you don't need any tools for this. Hopefully you can just see that we're sitting just slightly above fair value, but back into this pivot zone. So you're sitting right here is where you close. I call this the E trade. You see it looks like a big E, and that's in the other course that I'm going to be selling. For the low price of $20,000, but for you, I'm going to discount it, deep discount, $5,000. I call it the E trade for easy. Like, that's so darn easy trading guy. If anybody caught wind of him, it's very funny. That hardly trades. Yeah, that's the E trade. And here's the back part of the E. This is for the dyslexic people. This would be the backwards E. Let's not leave them out. If you come down here, it turns into the window trade. That's another course I sell. Window trading, where you get in and out the frame of the window. And then there's the glass block trading system that I have available. I trade cycles. You can see right here, the end of this quadrant's over. I guess I'm drawing crooked. You want to get at the top becoming a bottom at the cycle width of the other glass block. And then there's the cracked glass trade, which is when the vandals or the parasites decide they want that you have it better than them because you made so much money, and they see your Range Rover outside. And they're going to learn you a lesson, and they crack your windows, and this is the cracked window trade, which is basically a trend of social decay. And you can see that right there. Anyway, so you see what you want to see, and no risk on here, just pure analyzation.